This episode is brought to you by Suzy, a cutting-edge market research software platform that empowers some of the biggest companies in the world, like Citibank and Procter & Gamble. To find out more about how Suzy can help you stay competitive, go to tearsheet.co/Suzy. Welcome to the Tearsheet podcast. I'm your host, Zach Miller, editor-in-chief at Tearsheet. Today, I'm excited to welcome Lisa Nestor, the research director at the Stanford Future of Digital Currency Initiative. Lisa has an impressive background spanning blockchain, fintech, and digital currency space. She's held key roles in advisory positions at organizations like the Stellar Development Foundation, AirTM, and Cowrie Exchange, where she's driven innovation and growth in the digital asset ecosystem. Lisa, thanks for joining us on the podcast today.
Thank you so much for having me, Zach.
Well, let's start like really basic level. What drew your interest into digital assets? Like, where's your personal sort of story?
Sure. Yeah. Well, we'll take it back a step. I studied economics, but my first job out of university was in the Peace Corps, and I focused on economic development, and really my major project that I worked on there was a rotating savings and lending association, or kind of like a village bank. Mm-hmm. And I became very interested in financial infrastructure and kind of developing economies. I then went and worked in the microfinance field in India doing research for a couple of years, got my MBA, and discovered fintech. But after about a year working professionally in the fintech space, I was introduced to Jed McCaleb at the Stellar Development Foundation. Never heard of blockchain or Bitcoin before, was not on my radar. But when I started researching Stellar and, talking with Jed, it really just kind of brought together what I had seen as the power of providing what you can call open source financial infrastructure. When I was in the Peace Corps, this was a manual that explained how you just kind of bare bones set up a savings and lending association, but then translating that into the digital space through a blockchain. And I was really excited about the potential. I remember him pitching me and saying, the idea is that we would want to get every financial institution in the world operating on this ledger, but they can't buy it. They have to kind of choose to use it. And it's something that's going to be open and available to everyone. And I just thought that was a really radical and incredible idea, and something worth working on. So that was my path.
So is it fair to say that you see sort of a doing good component or positive, call it externalities to moving towards blockchain?
Yeah, I do think so. Part of it may just be the inevitability of technology. The internet does good, but it's also, the network effects of the internet are kind of what creates its awesomeness and its power. The fact that, it is kind of available to anyone at the same level of accessibility. But yeah, I think money in particular and access to financial services is something where it's not an even playing field. And so distributed ledger technology and digital assets have a huge potential to level that playing field. As a really basic example, yield. In many countries and emerging markets, you may have very poor access to being able to put some money into a savings account and get any amount of yield on it. And increasingly, and I'm not saying it's incredibly stable right now, but I think definitely over the next 5 to 10 years, the ability of anyone anywhere in the world to hold a stable coin in a digital wallet and be able to earn some level of yield on that asset is going to really be coming to market. And so that's just a small example of how very kind of uneven playing field when you start to have this open technology, and kind of like democratization of access to it, like it starts to make things more available. And for me personally, that's a huge motivator. That's something that I find very compelling.
That's awesome. I mean, and Tearsheet as a media organization, we're also, I tell people and our clients and our readers as well, like we're biased towards the good as well. And we do believe that making financial services better can help the world and help people within it.
Definitely.
Can you tell us a little bit about the Stanford FDCI and your role there?
Sure. So FDCI was founded out of the computer science school at at Stanford. Apologies. And its mission is to, work with the various stakeholders in the industry. That's academics, government stakeholders, and business stakeholders to support research around digital currencies. And specifically, that includes technical research. So, we are, like I said, from the computer science school, but also research around things like financial inclusion, policy implications, and just general adoption of digital currency. So I joined in the summer of 2024, and my role specifically is to be focused on what we'll call empirical research, to kind of get out of doing just technical research and developing new technical tools for distributed ledger, exchanges, the kind of technology side of blockchain and digital assets, and to do more analysis around impact, or experiments around adoption, or those types of things. So I typically tend to be more focused on economics and the policy implications of this technology. I can talk a little bit about some of the research that I'm doing,
Please.
but
Would love to hear.
that's my role. Okay, sure. So,
Okay.
for example, stablecoins are a product within the digital asset space, which have really taken off over the last couple years. Personally, that was an area where I did a lot of work in the private sector before I moved to Stanford. And, while stablecoins originated as this kind of tool for traders on cryptocurrency exchanges, the most or more recent kind of adoption and hyper growth in adoption has been coming from users outside of the United States kind of running to this asset. And so, some of those use cases are as a tool to do cross-border payments, kind of outside of the traditional banking industry, being able to, settle a transaction, whether that's a remittance or a merchant sale, peer-to-peer, and much more quickly and typically more cheaply than you could do if, let's say, you had to send a transaction through banking from Uruguay to Brazil. And also, another strong use case is when you have unstable economies, things like hyperinflation, you see a lot of users gravitating towards these assets as a way to, hedge the inflation, maybe secure their savings. And so, one of the research projects that I'm working on is looking at, are there kind of real measurable welfare implications to integrating digital assets and specifically digital dollar stablecoins into a household's financial portfolio in some of these unstable economies. So specifically, we're starting in Argentina. I think a lot of people are aware of what's been going on there in the past couple of years. It continues to be very interesting. But it's been a huge stablecoin market. And what we're doing is we're kind of leveraging an existing research study that was done by the World Bank called the Global Findex. And they kind of have provided these baseline measurements of financial welfare, financial stability, and security. And so we're taking some of those same measurements and then targeting a population of stablecoin users and asking questions like how do you use stablecoins. I think in general, there's not enough really good household level data on how adoption is happening, how households are really thinking about this asset within their own kind of,
Right. Like how's
you
somebody
know,
in Argentina, rural Argentina, know that they want a dollar based or pegged, digital currency? It's like where's the
oh,
information come from? Or they're already looking for solutions anyway because they're
they're
used to that
looking,
type of
yeah.
inflation. Okay.
I mean, I think Argentina is an atypical market, but because of the economic situation there, I mean, I've been to Argentina a couple times. I've worked with a lot of Argentinians. They're incredibly aware of the exchange rate, how things are moving. They have these things they call cuevas, which are basically black market dollar exchanges where you go in person and get cash. And so suddenly, when digital dollars became available, that was a huge thing. So yeah, it may not. When we say like rural Argentinian, like those people may not be the target users, but Buenos Aires is a huge part of that population. And I would
Sure.
go so far as to say most people in that city are very aware of digital dollar stablecoins.
The financial industry depends on data, but not all data is created equal. Choosing partners who can separate fleeting trends from groundbreaking innovations is more crucial than ever. If you want to unearth what forces are shaping the industry right now, download our guide at tearsheet.co/Susie. Amazing. What about CBDCs in your research or in your estimation? Do you see, we sort of covered the early stages of those. I think it's still mostly pilots going around, and I know some stuff that's happening in China, but it looks like most countries are experimenting at least with the concept of a CBDC, even if it's a small pilot. Where do you see those going? Where do you see potential there? Is there a reality that that countries are gonna start sort of owning this type of stuff?
Yeah, I mean, it's a great question. You're correct in saying there's a tremendous amount of research going into the space right now, and it seems like every day there's a new report coming from, the IMF or the World Bank or the Bank of International Settlement about this country or that country. Um, my impression is that there's a couple different, we'll say, like use cases for CBDCs. I think that you have countries like China or regions like the European Union. The US probably falls into this as well, where their national currency is seen as kind of a important strategic part of their national strategy and even kind of like defense.
Right.
And so because these are such already strong major currencies, there's a desire to understand how technology will kind of evolve the role of their currency in the global environment. And so there's a lot of research in that area. And yeah, I would say, some of the reports, for example, out of China also say that it's because the Chinese government is interested in even competing natively with some of the huge mega fintech platforms that they have there and making sure that there is a national, digital alternative and everything's not just going to be Alipay or whatnot. But so, I would say kind of national defense, national strategy is one of the use cases. I think another big use case is financial inclusion, or with many kind of smaller to mid-sized countries looking at stable coins or CBDCs as a potential to, kind of leapfrog existing financial infrastructure and provide a digital alternative that would enable, more seamless peer-to-peer transfers, maybe eliminate some of the like cash liquidity issues that you may have in rural areas. I know in the Bahamas, this was a big kind of thesis behind their CBDC. They have, a bunch of islands, and sometimes it's hard to maintain cash on those islands. So having a digital government alternative money has a lot of advantages. So tons of research. I don't think we've seen a huge success to date. I think there's been a lot of pilots and a lot of research, but there hasn't been a ton of adoption. And I think that's a very interesting question to ask, like why, when we see something like USDC or Tether having such viral adoption globally, if a country is launching their own digital currency, why aren't we seeing that viral adoption? So that's kind of the most interesting question to me. But yeah, I think lots of activity, but we've yet to see that kind of big success.
Right. And I guess from that perspective, what you're saying, Lisa, if we look at CBDCs and stablecoins particularly, if those were to take off and gain broader acceptance, there is a role for traditional financial institutions in both those models, isn't there?
Absolutely.
Yeah.
Yes. I mean, one of the biggest areas of research for CBDCs right now is the relationship between banking money and a digital central bank currency, and what would happen, how to kind of like manage that relationship. And so I would say, almost all central banks are very focused on making sure that if they were to launch a CBDC, that it wouldn't have a negative impact on their banking industry. And that is a risk. The United States, for a period of time, had postal service banks.
A lot of other countries do, right? Yeah.
Yeah, and the idea of having a pure government account that eliminates any counterparty risk outside of the central government can be very attractive to users, especially during a period of economic volatility. And so I think that's kind of like a big risk and question that is a focus of CBDC research. But the truth is most central banks are not looking to have a direct relationship with their citizens, a direct banking relationship with their citizens, at least not anytime in the near future. So most of the models I've seen around CBDCs do kind of have this two-tiered relationship where a CBDC is introduced. They'll maybe call it a wholesale CBDC, but the distribution channels are going to be through banks, maybe fintechs, but definitely primarily banks. So that's there. And then stablecoins, yes, I mean, they're hugely still dependent on banking infrastructure. Number one, for custody of the underlying kind of pegged assets, whether that's treasury or cash. But I hope in the future we see more banks participating in those on and off ramps for stablecoins. I think that's a huge area of opportunity, especially as we see stablecoin adoption kind of move past just what I'll call like retail consumers and into more businesses, medium and large corporates that are interested in leveraging these assets for things like cross-border payments, trade settlement, those types of things. I mean, banks are really the best position to provide that liquidity between stablecoins and what we'll call like regular currency, fiat currency. Unless exchanges really give them a run for their money, which I do think some crypto exchanges are eyeing that opportunity. So, but yeah,
they're sort of evolving into integrated financial services companies, the exchanges, right?
Yeah,
Like that's been the yeah.
Exactly. So that will be interesting to see. But one way or another, you need these kind of core building blocks to really make any ecosystem work.
Totally. I see we're getting near the end of our conversation. I want to ask you one last question before we go. And sort of given your all the research you've done and your vantage point in the industry, given your experience as well, like where do you see like some of the most opportune spaces, blue ocean areas for digital assets to take root beyond just like the trading of them and the storing of them? I guess what I'm asking is like, what are some of you mentioned these two big use cases, CBDCs and stablecoins. Are there other opportunities out there where you see like use cases emerging beyond where we are today?
Yeah, I guess I'll highlight two. I think the kind of hot new trend over the next 2 or 3 years is going to be real world assets, or what they call RWAs.
RWA,
And
right? Uh-huh.
again, I think this is,
So that's
taking
tokenizing existing assets?
exactly
Okay.
tokenizing existing assets. And, I think the benefit here that people see is improved liquidity for assets that oftentimes don't have very liquid markets, whether that's secondary markets or, yeah, I mean, primarily that. And then also just kind of leveraging the speed and low cost and kind of pervasiveness of digital ledgers, and kind of putting the assets on those so that they can move around the world so much more seamlessly, really open up global markets in a way. So I think that's going to be a really big trend. I'll say the second one that I personally find really exciting is tied to stablecoins, but it's also tied to migration and access to labor. So the company that I was at prior to Stanford, AirTM, I think has been very early on this trend. But, when we think about digital dollars, I think a lot of times people don't think about it as the digital dollar economy. And as much as we've seen this huge demand for things like stablecoins in emerging markets, I think the action of just, being somebody in Argentina and buying a stablecoin, that's really just the tip of the iceberg. I think the kind of bigger use case there is more and more individuals looking to earn in digital dollars through stablecoins. And that's, kind of a coalescence of online work, freelancer work, the gig economy, online content creation, these types of things, but then combined with this financial infrastructure that allows people to now much more easily get paid and earn in a currency which, before you had to, literally migrate yourself to another country if you wanted to be participating in that currency's economy. So I think that's a really cool use case. Has lots of political implications for it, but I think it's interesting, and we're going to see a lot of growth there as well.
Lisa, I appreciate you joining us on the Tearsheet podcast today. I learned a lot, and thanks for sharing your experience and your research with us as well.
Thank you so much for having me. This was great.